Good afternoon, team. The stock market experienced a decline on Friday, despite a weaker than expected jobs report, as concerns about Trump's tariffs and rising inflation grew. Investors are now looking ahead to the latest consumer inflation data and retail sales figures. The Nasdaq Composite began the day on an upward note but closed down 1.4%, resulting in a weekly decrease of 0.5%. It ended the session below its 50-day moving average, which was disappointing after it had regained that benchmark earlier in the week. So far, the tech-heavy index has risen just 1.1% this year. The S&P 500 faced a 1% drop for the day but managed to remain above both its 50-day line and its 21-day exponential moving average. For the week, it only lost 0.2% and is up 2.5% in 2025. Decliners outpaced advancers by about 3-to-1 on both the New York Stock Exchange and the Nasdaq. While trading volume was higher on the Nasdaq, the count of distribution days remained unchanged since a December 31st distribution day was removed due to the passage of time. The Dow Jones Industrial Average fell by 1% on Friday, contributing to its weekly loss of 0.5%. Amazon experienced significant losses following a drop after its earnings report, while Nike also underperformed. Small-cap stocks faced similar challenges, with the Russell 2000 declining by 1.2% on Friday. However, growth stocks showed resilience, as the Innovator IBD 50 (FFTY) exchange-traded fund gained 1%. The Direxen Nasdaq 100 Equal Weighted Index (QQQE) exchange-traded fund also remained above its key benchmark. Nonetheless, it may be prudent to limit exposure given recent market trends. Initially, stocks opened positively after the January jobs report indicated that the U.S. economy added 143,000 non-farm jobs, falling short of economists' expectations. The unemployment rate unexpectedly dropped to 4% due to upward adjustments in December's figures, while wages increased by 4.1% compared to the previous year. However, markets reversed course following the University of Michigan's consumer survey for February, which indicated that respondents expect inflation to reach 4.3% within a year, up from January's 3.3% and the highest figure since November 2023. This rise in expectations was attributed to concerns over tariff policies, alongside a decrease in consumer sentiment of about 5%. Further unease was sparked on Friday afternoon when President Donald Trump announced plans to introduce reciprocal tariffs the following week, although he did not specify which countries would be affected. Instead of a flat rate, these tariffs would align with those imposed on U.S. goods. The upcoming week promises to provide additional insights into the economic landscape. Several Federal Reserve officials are expected to speak, while the Consumer Price Index report for January will be released on Wednesday. Additionally, Friday will bring January's retail sales data, offering further understanding of consumer economic health. Earnings season will also continue, with notable companies including McDonald's, Coca-Cola, Reddit, HubSpot, and AppLovin set to report their results. Thanks for watching and trade safe.